Happy Valentine's Day, traders. Robert H here. In case you're wondering about my last video, why would I get in trouble if I erase this stuff? Well, just some drawings my kid put on my board there, so I'm not allowed to take that down. Anyways, happy Valentine's Day. Today's a very special day for me. Actually, it's my 1-year anniversary of being in the stock markets live. February 14, 2018 is when I went live. It's been 1,065 trades later. Come a long way. Still around, haven't blown up. I still remember my very first trade. Snap. Took 100 shares short, lost $11 at the VWAP. Then I got emotional, flipped positions, and made back $25. So I was green on the day. I've come a long way since then. The way I traded back then was much different than the way I trade now, and that's the whole part of this journey, this learning curve, is discovering what type of trader you are. If there's any advice I can give you guys to survive in this game, is basically comes down to 4 things here. The first is probabilities. Now, I read Trading in the Zone when I was still in Simulator. I kind of glossed over it. It's a little bit long. The format's a little bit long. But I thought to myself, okay, cool, I understand. Went live, and then I swear it was all a blur. 3 to 6 months, I was just flying by the seat of my pants out here in the markets, trying to change bad habits and just building new bad habits, breaking rules left, right, and center. Didn't even have a clear set of rules. And, it was very frustrating. It was the nut house, I called it, right? It's the definition of insanity. Just trying the same thing over and over and expecting different results, right? We wake up every morning, say we're not going to do this, not going to do that. And soon you just lose track of time and you just kind of get mired in the day-to-day repetitions, right? So anyways, I picked up Trading the Zone again after I think 6 months of being live, and then I read it a second time or third, fourth time, I forget what it was, and I just thought to myself, wow, this stuff actually does make sense now, right? So I kind of reminded myself, refreshed myself, and I talked to Carlos. We bounced a lot of ideas back and forth about what does it actually mean to trade in probabilities. We reduced our share size, kind of went back to the drawing board, back to square one, and traded the charts. And just forgot about the money and just thought about what Douglas talked about, right? Rest in peace. Anything can happen. You don't need to know what's going to happen next in order to make money. An edge is nothing more than the odds of one thing happening over another. And there's a random distribution of wins and losses that define an edge. And every situation in the market is unique, right? Basically, that's what it boiled down to. And understanding that is one thing, right? You understand, you read the book, okay, you comprehend, right? But operating and functioning with that mindset is the leap, right? That's where you leap into Trading in the Zone. And once you made that leap, the emotions and stuff, they're not going to disappear entirely, but they kind of just take a back seat to what's our objective out here. My objective out here is just to take as many of my setups as possible that present themselves, and don't worry about each individual trade. I stopped caring about each individual trade. I'm numbing myself down to the money aspect. As I said, I don't look at the P&L, all this stuff anymore, and I'm desensitizing myself to the outcome, right? I'm more concerned about just trading my patterns, trading my setups whenever they show up. I have no expectations if it's going to be right or wrong. Do I want them to be right? Of course I do, right? Am I doing my best out here? I'm not trying to lose on purpose. I'm trying to take profit when the chart tells me to take profit, and just trusting the charts, right? So thinking in probabilities and operating probabilities is the biggest key there. You get away from the whole trading streaks. I used to have the calendar up here marking off green days, red days, and 12 days in a row I'm green, and on a 14 trade win streak. All that's garbage. It means nothing. It's a marathon, guys. There is no beginning. There is no end, right? Just because the market closes at 4 o'clock and then opens again, does that mean you're restarting anew? Not really, right? You think about it, a sports season, each game is kind of how you chop it up, but it's it's 82 games in basketball or 162 in baseball, right? It just keeps going, and it's at the end of the season where what really matters, right? The individual performances are kind of just averages, right? So anyways, long enough rant about that. Next is patience. Patience is a big one. It took me a long time to become patient. I used to trade way over trade. I think it's a big problem for a lot of people. It's just not waiting for things to set up, right? Just taking things because the chart's moving. It looks like a short here, it comes back up, or oh, that looks like a long here, and then just because it looks a certain way, does that mean anything, right? What I learned is that being patient for my setups is really key, because when you're waiting for your setup, you take the trade, you wait for it to work out, right? I know you can get bored easily, but at least you're comfortable. You're in your area of expertise, your zone, right? It's when you start overtrading and taking random non-setups is where I think a lot of the emotion, the overtrading, and all that other garbage comes into play. So just being patient, waiting for things to, you got to understand that the market's doing nothing 80% of the time. I really believe that. It's chopping, right? Is it going up and down? Yes. But say the market's just chopping, right? And then it makes a move. If you're going long here during the chop, are you going to survive this micro gyration? You might just stop out down here, right? Or if you went short here, are you going to survive this micro gyration? You might stop out. It's not until that an actual setup appears, right? And I'm going to get into that next, a playbook. A setup has to appear before you take it. That should be pretty obvious, right? We're not out here gambling. We're not out here rolling dice. We're out here trading patterns. Next is the playbook. So I used to have a really large playbook. I'm talking 10, 15 strategies, both long and short, so double, right? 20, 30 patterns I'm looking for. A lot of them are probably just overlapping things of each other. I've narrowed it down. This was Andrew's advice to me, in the classes. Class 4 was that you don't need to master all of the strategies. Just get good at a couple, and that's how you survive, right? That's how you build the confidence and survive the learning curve. So then you are in a position to try new things as your equity builds and your confidence builds and your execution gets better and faster, whatever. I narrowed mine down from 10 or 12 down to 3 or 4. And that's just done wonders on my trading, because now my mind and my brain, I said this in a prior recap, I'm focused, right? I know between 9:30 and 9:40, I'm looking for these. I'm looking for orbs, right? Only orbs. And then boom, 9:40, 9:50, 10, 15, 10:30, I'm looking for ABCDs, trends, consolidations, anything about to break out again. 10:30, 10:45, I'm switching to reversals or trend trades if those I can get a good entry on those, right? You really got to think of it like that, and do this exercise. I'm going to share this in the video recap, actually. I'm going to share a sample playbook that I've shared with some other members of ours. It really helps to remind yourself, what are you out here doing, right? As I said before, sometimes you get mired and lost into it 6 months in a year, and you forget what your edges are, you forget what your strategies are, what Andrew's taught us. You forget what you're good at. What are you looking for? What's the signal? What's the confirmation? What are the criteria for this? Some people in the forums, Mike is doing a good job of that for his journal there, right? But you do this exercise, because you would not start a business without a business plan, right? Say, I'm going to open a restaurant. Oh, what are you going to sell? I don't know. We'll figure it out. What's on your menu? We'll figure it out when the door's open. What's your seating capacity? What decorate? No, we'll figure it out when the people come in. Seriously, is that what you would do? No, you have a plan laid out, and that's what the playbook allows you to do, to objectively identify your setups and patterns. Because if you can't write them down and explain them to another person, you sure as hell not going to identify them in real time when the markets are moving. All right, next, proper risk management. This is really key. We harp on this a lot, and Carlos did a really good recap on that today. Basically, proper risk management, right? Any fool can press the button, but to be consistent, you really have to manage the risk. Never risk more than 1 to 2% of your account in any trade, and always have a stop loss in place. So say you're going to go long here, your target's here, stop loss here, your entries here, right? Obey your stops, have the right sizing, that's 2, and never risk more than 1 or 2% of your account. But basically 2 to 1, 1.5 to 1, 3 to 1. Some people are out here trying to get 4 to 1 with lower accuracy, whatever it is, right? It all comes down to risk management, and these are all kind of tied together, right? So I'm not sure if I'm doing a good job explaining this, but basically it took me a year to figure this out, right? Before, I was just trying out here to be green every day and try to win every single trade, never accepting the fact that I was wrong, getting emotional, all these things. And I kind of just took a step back, right? And broke it down. What does it actually mean to be consistent? A consistent trader. It doesn't mean to be winning every single day, every single trade. Even Andrew is not winning every single trade, right? It means, to manage your risk. Basically, manage your risk, trade your setups. And if your setup's not there, don't go out there trying to chase things or flipping, rolling dice out there in the markets. All right, let's switch gears and answer some questions that I got in the forums. So this person asked me about the chat room. First part of it goes, you still find it being useful being in the chat now that you're an established trader with a unique trading style? Second part was, how do you eliminate noise in the chat room from valuable information and don't get tempted into following others? And 3, do you think there's a difference in how you use the chat room initially when you started with BBT and how you use it presently? Well, I'm still in the chat room, yes. So I'm still in the chat room every day. Sometimes you hear from me, sometimes you won't. I'm trying to focus on my own trading. Sometimes I'll call trades, sometimes I won't. It really depends what I'm doing, right? There's a lot of things going on in the background. Anyways, do I find it useful being in the chat room? Yes, I do. I'm not out here to copy others. I'm not here to copy or mirror Andrew or Carlos or Brian or for anyone for that matter. It's really useful having people in the room because people are watching all these different stocks and you cannot watch everything. You can't watch 8 stocks all by yourself here on 2 or 3 different chart time frames and stuff, right? So it's helpful to have other people in the room calling something. Oh, Roku breaking out, MU highway to hell, whatever it is, right? Then you pull it up, you make your own decision, you use your own judgment. Is this a real setup? Does this person know what they're talking about? And that kind of answers the second part of their question, is how do you find, eliminate valuable information, don't get tempted following others? Well, I've never followed anybody. Never followed anybody in this room since day one. I'm out here exchanging ideas, getting opinions, and having multiple eyes. We have, all the people in the room looking at all these different stocks. and it really helps, to people are watching different scanners. I've caught a lot of trades every day, and people are calling out moves and pulling off. Today, someone called Roku. It blasted off. It's like, whoa, wish we had that on watch. This person obviously did, right? So I think the main point about being in a room is the support. Questions, right? A lot of people have questions. We answer those. You just learn. I'm always learning. That's the one thing that ceases to amaze me in this room. As we get new members and old members and veterans, people just exchange ideas and opinions and stuff, strategies, learning about DOS, learning about trading in general. It's never ending, and that's one of the benefits of being part of this community. Great minds trade alike. We may not always take the same setup. Sometimes we're on opposing positions, but it's really about being a part of a group. That peer-to-peer mentorship and learning, just the solidarity and the camaraderie of being in a chat room, I think, is one of the biggest bonuses. So anyways, enough about that. Let's get to the trade. So I want to talk about playbook, right? So playbook, here's a little example of a playbook, kind of a trading plan. High level, so first tab here is just high level. What's your daily goal, max loss, risk controls, if any, how much you're willing to risk per trade, time constraints, right? If you're saying you won't trade the first 5 minutes or after a certain time, how many trades you're allowing yourself per day, stop loss mechanism, if you're using hard stops or mental stops, whatever, goals for the month, and review this every month, right, based on how you're doing. Then I kind of get to the setups tab here. So this is just a breakdown of all the different setups or strategies that you look for, right? So 2-minute or 3-minute opening range breakouts, 5-minute orb, extreme reversals, etc. So the time of the day that they usually happen, what charts you're looking at, 1, 2, 5, 15, 30-minute, 1 hour, whatever. What are the signals you're looking for? What are the confirmations to get in and out? And what are you using as your stops, right? So there's just some examples that I have here, different setups, VWAP reversals, bear flag, bull flag. The way this file set up is, you click and then it links to an actual page with examples. You really got to spend the time and do this, especially if you're feeling lost out there, that, what am I doing every day? I'm just not trading setups and things like that. Just take a break, write down your strategies, make some charts, review them, and make sure that you know what you're looking for every single day. Anyways, AIG, what did I see? So AIG, now this thing sold off very heavy. I wanted to take the 2-minute opening range breakdown. Not visible in this chart, but it was probably the cleanest move of the morning. Unfortunately, I missed that, and then it just kind of went down to low of the day. Then I saw it reverse. Now this is an extreme reversal, new 15-minute high. Why didn't I take this? Well, the VWAP's right there. The risk to reward's like less than 1, right? Not taking that. So I waited for it to punch above the VWAP. Got over this MA here. Okay, I said, okay, this probably has the ability to trend based on the size of these white candles, right? Really, really bullish. So I waited for this is a really poor entry in my opinion here. This is the first flag. I thought that this was going to be the second flag. Turns out I was wrong. It decided to do an extended flag. So I had to survive this here, right? I had to survive this, but my stop was actually, originally it was this 40.85. Then I pulled up a daily chart and I saw that, holy smokes, there's a moving average right below where I went long at 40.90, right? So I said to myself, I'm holding this moving average. It's good. If it punches through, it's going to at least bounce around and consolidate before it decides to lose it or come back up. So I held through. My stop was 40.85, something like this here, but it didn't even get there. And then off we went, right? So it formed that second ABCD flag formation, then boom, bounced up. And then it kind of just flagged all the way. Just kept flagging and flagging and flagging. And this kind of relates to a question that someone asked me in my last video. LEB James here. Isn't it risky to bet against a trend change or reversal? How do you know the trend has truly changed? He feels a lot of the times he takes a position against the trend thinking it's a reversal, and then he stops out as soon as it continues the trend. Well, there's probably people shorting this. They're thinking to themselves, oh, AIG is so extended, it's a gap down, this thing has no business being up here. But until you see any sign of a trend change, right? Just look at this, no lower lows, higher highs. People are trying to short every pullback here, right? They are wrong, and that's why we're squeezing up. People smell blood in the water, right? When you feel, this is what Andrew teaches us. Who's in control, bears or bulls? When the bulls are proven to be wrong and people are stopping out, right? New 15-minute low, people are stopping out. The bears smell that. They're shorting, aggressively shorting, driving the price down further as people start running for the exits. And vice versa. When people are stuck short, the bulls can smell that. They can sniff that out, start going long, and then all of a sudden there's a huge squeeze, right? So, don't short things just because they're going up. Look for the confirmations. And this is actually one of the reasons I got out of this trade. So as you can see, I took it long at 41, rode it all the way up to 41.80. Missed my limit order here by a nickel. I had it at 41.80, 80 flat actually, so it hit 77, missed it by 2 or 3 cents, and then I started seeing signs that, you know, it's probably topping out here. So this dump, right, lower lows, lower highs, hitting that, and then the moving averages, as soon as it kind of starts tapering inwards, look at that, as soon as it crossed is when it was GG, right? Notice that as soon as the moving averages crossed, the trend changed. Off we went the other direction. So I had to leave the house actually to cut my hair. And if I was still around, I may have flip positions here. Look at that beautiful, beautiful trend change, right? So don't try to jump the gun. Don't try to predict. I'm in the business of reacting to moves, not predicting. I'm reacting, and very, very quickly. Anyways, long recap. Hope you guys enjoyed that. Thanks for watching. Happy Valentine's Day. I'll see you guys in the chat room tomorrow.